Please take notes. While trading can be rewarding, it comes with high level of risk and you can lose all your funds. And also note that videos on this channel are for educational purposes only. None is intended as investment advice. Please do your own research and also consult your financial advisor if you need one. Thank you. All right, so in this first lesson 1.1, we will be looking at the definition of Forex trading, and we are going to be breaking it down as simplified as possible, as in so that you really understand it. Because we know with this course we are speaking to a complete beginner. All right. So, what is forex trading? Forex trading or foreign exchange trading involves the buying and selling of currencies in the global marketplace. Now, look at it this way: you are traveling from, say, US to the UK. In US, they use the US dollar, and in the UK, they use British pound, the pound sterling, and you have $10,000. And the exchange rate for the between the US dollar and the pound sterling is 1.25. Now, that is £1 sterling will be exchanging for $1.25. All right, so in this case, since you want, okay, let's say you want £10,000. Let's put it that way. You want £10,000. So, and the rate is that £1 is $1.25. So, for you to get £10,000, you will need 1.25 times 10,000, which will give you 12,500 US dollars. So that's what we use to get £10,000. All right, at the rate of 1.25. So you now got it. Either you kept it in your bank or anyhow you want to keep it in your wallet, anywhere you traveled. All right, then you completed your business, and after everything, inflows, outflows, you are about to return back to the US and you still have your £10,000. Okay, now you have £10,000 and you want to convert it back to the US dollar, but by this time the pound sterling has appreciated beyond where it was the time you exchanged it the first time. And so this time around now, £1 is going for 1.35, 1.35. So, or 1.3500. Let's complete the digits. Okay, so what you do at this point now will be multiply £10,000 by 1.3500 US dollars. And what would that give you? That will give you $13,500. So, have you made some profit? Of course, you've made a profit of $1,000 because you exchanged $12,500 for £10,000. Now you're about to exchange £10,000 for 13,500 US dollars. So that is forex trading there. All right. You can do it with any currency. It operates on the principle of exchanging one currency for another, aiming to make a profit from fluctuations in exchange rates. Exchange rates keep fluctuating, so you just look for a way to make profit of that. You could actually buy it. Of course, you may have a relative that will send you some hard currency, and then you check the exchange rate. Exchange rate it's not good enough for you, and you want more. So you could start to keep it, and while you're keeping it, it begins to dwindle or go down. At that point, you may begin to panic. What if I continue keeping it and it goes completely to a level you don't like? Then you may want to rush to sell. So these fluctuations can create panic if you don't understand the markets. So the history of forex trading. The forex markets has evolved significantly over the years. It began as a system of currency exchange in ancient times, and by this time also, trade by barter had happened. You want to exchange, you have goods and you want chicken, so you can just go to your neighbor and then you agree and then you exchange that, and it evolved until it got to a point when it was even gold. All right. But then in modern forex markets that emerged in the 1970s, floating rates of exchange or floating exchange rates was introduced, And this was under the Nixon administration when President Nixon was president in the early 1970s. So that was when this happened. And since then, it keeps evolving and developing until today that even almost everybody can trade Forex now. All you need is access and the right knowledge. Okay, so the market has grown to become the largest financial market in the world with a daily trading volume exceeding $7 trillion. Some say 6 trillion, some say 8 trillion, but whether it's 8 trillion, 5 trillion, 6, 7 trillion, the most important thing you need to know about that is that the forex market is the largest single market on planet Earth. The importance of forex trading plays a crucial role in global trade and finance. It allows businesses to convert currencies for international transactions, facilitating investment in foreign assets and providing opportunities for traders to profit from currency fluctuations. All right, you may not have a bureau de change business, but you can also trade forex. So these fluctuations, you could go buy, hold it, and then it appreciates, you sell it back. That's just one of the major advantages of forex trading. The market's high liquidity and accessibility make it attractive to both institutional and retail traders. So the forex market is not just attractive to institutional traders or investors alone, even retail traders just like you and I. You are taking this course because you have heard it that people are making millions from forex. You may not make millions, right? You may not make millions, but guess what? If you are disciplined, focused, and committed, you don't give up, you can actually make a good living trading forex. Yeah. All right. So that's the end of this first part, 1.1 lesson 1.1. All right. So in the next video, we'll head on to lesson 1.2. See you there. Thank you very much for watching.